Hold on tight, crypto enthusiasts. Bitcoin is gearing up for an accelerating journey. Recent data reveals a whopping $8.18 billion in Bitcoin ETF volume since its launch, with weekly volumes hitting $1 billion. Despite a 15% retracement this week, marking the second significant dip post ETF launch, experts predict a roaring comeback as brace yourselves for the Bitcoin surge, eyeing $70,000 today and aiming for the coveted $100,000 milestone next. Don't forget to subscribe, like, and share, and let's start. So let's start with Bitcoin attracted by the $74,000 target like a magnet, and we're ready for it. You reach that port, that author says. The biggest mistake you can make is to procrastinate on Bitcoin. Next up is $300,000 in 2024. Well, no one laughing on Michael Saylor anymore and on his way to become the richest man in the world. Remember, there will never be more than 21 million Bitcoin for 8 billion people. There's not much more you need to know, as his shares are already growing at the new all-time high. Since 2021, we could see a $1,290 price and 1100% growth, which is massive for the past 5 years. Also, let's go for more. Bitcoin's whales buy in the bear markets and sell in bull markets, but so far they have not sold yet, and I will keep you posted on this one if you are interested in it. Time to sell your dominance. As we're looking at the percentage of a market cap Bitcoin dominance, we could possibly see that we are in a selling position as of summer escalator and moving averages as well, and most of people just selling their dominance right away are right now. Cathie Wood's forecast: Bitcoin price $1 million plus post halving. Her ARK ETF has seen a $2 billion of inflow since its launch in January, and all Bitcoin ETFs now hold 4% of all the 19.6 million Bitcoins on the market. Bitcoin broke through the $68,000 this week, and it's up more than 50% a year to date. And in this interview, if you want to check it out by yourself, you could go to the Madison Rady on Twitter and check it out by yourself. Let's trigger some perma bears, as every time Bitcoin closed above the horizontal trend line and the monthly candle flipped from green to orange, then price retested the yellow line. Yellow line is currently at $116,000 and trending upwards. If you know, you know. Bitcoin is going to $1 million, as this is the solution to almost every economic problem we have. There will only be 21 million tokens, and less than 1% of people have figured it out. 15 to 25% coins are likely lost forever, and only 6.4% of the supply is left to be produced. Why aren't people getting this? And you need to get it because it's gonna be late pretty soon. So what does Bitcoin needs to move for a $70,000 price? Despite massive fluctuations in Bitcoin price, the overall interest in Bitcoin remained high, as the surge in liquidity for Bitcoin showcased the growing interest in Bitcoin. Looking at the state of the ETFs, according to recent data, approximately $1 billion worth of Bitcoin ETFs volume was seen each week, totaling $8.11 billion since the launch of the Bitcoin ETF. As this week, Bitcoin experienced a 15% retracement from the peak through as marking the second significant drawdown since the launch of the ETF. The earlier drawdown occurring at the ETF launch was 20%, as this recent dip provided an opportune moment for major outflows in the ETFs, especially after a substantial return since the 11th of January, prompting a strategic move to de-risk and secure profits. So the 5 ETFs with the lowest inflows, totaling $660 million, seem relatively inconsequential in terms of tracking, as notably GBTC hit a 50% discount at one point, indicating that investors holding it may not be overly concerned about the 20% drawdown. Despite witnessing a $10 billion in outflows, the drawdowns, while present, appear shallower, with ETFs revolutionizing the landscape in the most successful launch in history. Amidst expectations of 30% plus drawdowns based on past cycles, the recent all-time high before the halving challenges conventional norms, as the evolving dynamics are evident in changing buyer profiles, particularly with no outflows in the past 2 days and increasing inflows. Furthermore, with Bitcoin supply set to halve in less than 50 days, the market landscape is undergoing significant shifts. And at the press time, Bitcoin was trading at $66,000, reflecting a marginal 0.42% decline in the past 24 24 hours, and approximately $2.2 billion worth of long positions set to be liquidated if the price drops to $63,000, while about $2.4 billion in short positions face liquidations if Bitcoin surges to $70,000, and if the price drops to trigger long liquidations, it may intensify selling pressure, leading to further downside momentum as traders unwind their positions. As conversely, short liquidations resulting from a price increase to $70,000 could prompt a short squeeze, causing a rapid upward movement as traders rush to cover their positions, as this liquidation level acts as a critical point in the market, potentially amplifying price volatility and contributing to swift and substantial price movement. The next up we go for, as SEC boss issues a major Bitcoin warning. During a recent interview with Bloomberg, Securities and Exchange Commission Chairman Gary Gensler pointed to the volatile nature of cryptocurrencies like Bitcoin and Ether, cautioning investors about the inherent risks, as this is the highly speculative asset class, Gensler said, emphasizing the dramatic price fluctuations experienced by these digital assets. The conversation also touched on the topic of cryptocurrency regulations. Navigating the waves of crypto volatility, Gensler's warning come amidst the growing concerns over the stability of investments in the cryptocurrencies after they experienced a rollercoaster ride, and one could just look at the volatility of Bitcoin in the last few days, as he pointed out, arguing that the thrill of investing in these markets might not be for everyone, especially those averse to high-risk financial rights, as he further noted the foundational issues underlying these digital assets, questioning how firm is the foundation of that. You get to the top of that hill. How is the foundation underneath it? As Gensler's cautious stance on the topic of crypto regulations, Gensler remained cautious. He spoke about the complex nature of determining whether digital assets like Ether are securities or commodities, and as reported by You Today, Gensler has repeatedly dodged questions about the Ethereum's regulatory status, and he once again stressed that a SEC's approach depends on the fact and circumstances as to whether the investing public is anticipating a profit based on the efforts of others. Michael Saylor thinks Bitcoin ETFs will outshine gold, compete with S&P 500. MicroStrategy's former CEO Michael Saylor foresees Bitcoin ETFs surpassing gold and potentially competing with the S&P 500 index as the company gears up for $700 million investment in Bitcoin. And Saylor believes that Bitcoin funds have a potential to outshine gold ETFs, as which have traditionally been among the largest commodity ETFs in the United States. And Bitcoin could soon challenge S&P 500 index ETFs. And in a recent interview, Saylor mentions that Bitcoin ETFs could outperform the S&P 500 index ETFs, as Bitcoin ETFs are on an upward trajectory as BlackRock's iShares Bitcoin Trust reached the top 0.2% of all the such products last month. And Saylor described ETFs as an universal API, providing investors with a seamless means to trade various funds, including Bitcoin. An application programming interface serves as a standardized channel for data exchange, streamlining interactions between different computer systems. Saylor elaborated that a framework also serves as the global standard for trading volatility or facilitating credit issuance. Before the introduction of ETFs, securing a loan against the Bitcoin would have been cumbersome and would have significantly higher interest rates. Individuals could potentially leverage shares as collateral for a mortgage through the established broker-dealers like JP Morgan and Merrill Lynch with the ETFs, he said. And Saylor emphasized that these ETFs have opened up a financial landscape, offering mainstream investors awareness, opportunities, and functionality, as he added that the significance of this development cannot be overstated in its impact on the entire network. That's all the information we got for today's video, so don't forget to subscribe, like, and share. See you in the next one, and peace.